Hey, what's up, YouTube? This is Maurice once again, doing another follow-up video before I go out and do my little workout. Okay, now the stock market is actually coming back. As you can see, this pink line right here is the trend line. That's the trend line. Stock market was always climbing above that. Then we had that big dip in October, and they told you it was the end of the world. This is exactly where I told you to buy stocks at. Now we're right here. Now, we're going to have trouble if we can't get above that pink line, because that used to be our support line. You see that? We bounce off of it like I told you in the last video. We bounce off of it. We bounced off of it. We was rising above that. It was real strong then. Every time we bounced off of it. Now, sometimes what was support can become resistance. So, they're telling you to buy stocks now. They didn't want you to buy it down here. They're telling you to buy it up here. Be very careful, because this may happen. It may start to go back down. Now, if it can pierce this line, it'll continue to rise. Okay? That line, by the way, that's the 50-day moving average. That's the way the stock move, in a 50-day period. I'm sorry. That's the 200-day moving average. This is from February 2016. We was down here at 1800. Now the S&P is up here at exactly 2742. I'm sorry. Okay. You guys got to excuse me, man. I've been working out, man, and I'm out of breath. Okay. So what I'm saying is, man, if you guys would have bought right here, you guys pretty much recovered all of your money right there. Even the people that lost money, they kind of recovered everything that they had since 2016. But if you would have came right here, you'd be ahead of the game. So even if it drops, you're still up. So, that's just a brief little video I'm making on how to read charts and everything. Now, what's kind of worrying me a little bit is a thing called sentiment. And sentiment means, like, basically what people think about the market, what they think about, the economy and everything. They're getting what you call bullish. Bullish meaning they thinking everything is really good. And I'm what you call a contrarian, meaning I kind of go against the overall trend. Another reason why I don't like this, the way the market is, you see the line was sloping up. Now it's flattening. Look how flat it's starting to get. That's a danger sign. As a chart reader, we look at things like that. Now let's hear some of the ways these guys are talking.
A run at the 200-day. So as you can see right here, we are now bumping back up against that level. It's not a physical barrier. It's not a wall. It's not a fence. It doesn't exist in the real world. But it is a level that people will take note of, possibly change their behavior if we can close above, especially if volume is good. So to me...
Does it have steel slats?
So, it's got very
go under it or over it.
It's a very smart, very beautiful wall.
It's a smart moving average.
Terrific. The best wall.
To your point, as you make this point, the S&P is going for 6 days in a row.
That's the first real challenge of my point is... Let me button this up. The first real challenge of what she asked the question, is it sustainable? Well, so let's see, because now we're at a level that is psychologically important to people. We're at a level at which algorithms may or may not be selling or buying. Let's see if the will is there to take this market back up above its 200-day, but then let's also recognize it is a declining 200-day moving average. It's not flat, and it's not uptrending, so let's take it with a grain of salt when it does.
Judge, approximately the 6th of November or so is when Lumentum, LITE, came out with their warning. They said one of our biggest customers, their words, is cutting back. Fell out of bed with it. Avago, Broadcom fell out of bed. A lot of the big suppliers to Apple fell out of bed. Of course, Apple fell as well during this period. And if you take a look at the rebound from that, to Josh's point and I think Pete's, you're looking at $84 for Skyworks, for instance, traded down to $60 at the end of December, and now it's right back in the 80s. It's up $12 today. So you've recaptured all of that, and obviously Apple is far from recapturing all of it. Now, I'm not saying it has to, I'm saying at $170+ a share. So Apple is pretty fairly valued in the way I'm looking at it right now, and I've aggressively written calls against it. But to Pete's point about, you know, the running backs and the skill position, these chip stocks, which Skyworks is one of them, have just run like crazy, and that run isn't an outperformance, it's just taking back the ground that it had given before.
So besides Teradyne, NXP.
Okay. If you watch this business channel, there's really only two shows you need to watch. This is called Fast Money and Mad Money. You know, that's when you start listening to skilled traders who's actually out there in the trenches actually doing this, not newscasters that are just clueless and don't have a vested interest in the market. You know, but the thing is, to understand what these guys are saying, you got to start, you know, kind of educating yourself on stocks and everything. You know, because, I mean, you guys probably don't know what they're talking about. But basically, they're talking about is we got to wait and see that the stock market can get above that line. If it can't get above, see, the thing is, the market moves based on supply and demand. And so if it can get past that line, a demand and an influx of cash will come in that will propel the stocks higher. You know what I mean? And that trend line that I showed you that's flat, it'll start to slope upwards. And that'll cause the stock market to, you know, gain momentum. And next you know, you see on the news, the Dow is at an all-time high. That's what happens with that. Now, if that doesn't happen, we're going to what you call test the lows. Meaning, we're going to go back down there to that low level that we saw. That's good if you're a long-term investor. Because you're a long-term investor, you should be putting money inside the stock market systematically. You know, but if you're a trader like me, oh, you can't take chances like that. You got to have your money out of it. And you got to try to, you know, catch the bottom and sell at the tops, which is impossible. But, you know, I have my price targets where I get in and get out. Okay, guys. So I just wanted to do a little follow-up video. I'm about to go to this gym. And hopefully this might spark your interest in investing, man. When you guys can see the money that you missed out on, man. I mean, your money's in the bank, man. Like I said, you haven't even got 1%, you know, during that time. It's only been 2 months. So right here, your money has recovered 25% in value. You could have made a 25% return on your investment. All right, talk to you guys later.